I'm going to buy 5,000 of ZTR because it gives a 15% dividend yield, 14.66, and its maintenance is only 30%. So it's taking up no credit for me. See, long 30% there. So the margin that I have, let's say 113, the purchasing power I have. Let's go see it. We're in our portfolios. We go check out our margin here. And it says here available withdrawal 112. So we have 552,000 purchasing power, and we're in 200,000 in debt, 225. And I was looking to add to some utility exposure today, but ZTR has a lot of utilities in it. And so I was thinking about adding to ZTR, and let's see how much this available withdrawal number drops. So our estimated income, just for proof that we're going to increase our dividend yield, our estimated income is 98.7 per year. So let's go add 5,000 of ZTR and see what our available withdrawal does, 112, and our estimated income does. Because you just want our available withdrawal to be above zero. I like to keep it comfortably at above 100,000, even though our account value is 384,000. It's about playing with that available withdrawal number and avoiding margin calls. So ZTR, Virtus total return fund. So I want to buy 5,000. So 5,000, market value, market order, preview, place. And again, this is a total return fund, so it has all sectors, it's balanced. But it's only a 30% maintenance. So the 112 we had turned to 111. And the purchasing power here was minimally affected because 30% maintenance on 1,000 is nothing. So 1,000, that took up 300 of withdrawal of equity. So 300 times 5 would be $1,500. So it took up about 1,000, a little over 1,000 of our dollars. So from 112 something to 111, it's negligible. Now our estimated income should be something more significant. Our estimated income, should be, it's 99.5 now because Virtus is paying a 15% dividend. Now I just want to know why on the Morningstar test that it only yields a 1-star rating. Why only 1 star? I mean, it didn't do the best. Your 10,000 turned into 25,000 in 10 years. So your money doubled, which is good actually. I mean, that's pretty good, but it didn't do as well as our cornerstone funds, CLM and CRF and USA, the ones we've done constant videos on. Please check those out. It hasn't done as well as those. So, but it's still done pretty well, and the dividend looks sustained, like it's been sustaining itself. As you can see here by the dividend history on Seeking Alpha, we go to dividends and we look at the history, and you see that monthly it is given 8 cents all the way down. So for a whole year in 2022, 8 cents. 2023, 8 cents. Even 2021, 8 cents. So 2020, 8 cents. It was even yielding more before the Corona crash. So it's had a pretty consistent dividend at about 15% of 8 cents. Now, I know that a lot of it's return of capital, and people like to trash return of capital, but return of capital just gives you tax benefits, and you don't have to pay the taxes unless you sell a lot of times, or the dividend may be taxed a certain way. Go seek a tax advisor on these things, but for return of capital, it's not all bad. You get tax deferment. So look into that. And so I'm definitely going to take advantage of the return of capital aspect for ZTR, especially since they keep paying the same dividend rate of 8 cents, which is 14.66%. So I don't know why it only got 1 star when it doubled your money in 10 years. It's held up relatively well. It hasn't like gone to zero or anything like that. Like a lot of funds with big dividends, it hasn't just eroded itself into the ground completely. Let's go check out a chart of it. ZTR. And if you're wondering why we don't own this already, again, it's 1 star, and yes, it doesn't look at that performance on a chart. It's been pretty abysmal. But if you look at it on a full chart, on a 5-year chart, it's staying in a pretty good range of about 10 to 12. So from 10 here, from 10 to about 12 was its steady range. Pretty consistent. If we go on a full chart, we'll see, yes, it's steadily just declined. It looks kind of like a cornerstone fund where it's relied on a lot of return of capital. I'm sure they do rights offerings, which we're going to have to stay on top of, because these funds have to, they don't have to do rights offerings to sustain their yield. They just simply sell the stock off. But when they do the rights offering, it does help them raise more cash, and it drops the stock as a result. And that's what you could be seeing when you look at these big drawdowns. It could be from a rights offering. I need to look into that. I only have 5,000 in it, 30% maintenance. So this video is just, I'm asking questions of why it's only 1 star. Yeah, I get that it hasn't returned to its old highs, but if you just do the math on it, 15% times 10 years, it's 150. That's 150% return. You've more than doubled your money. And so even though it doesn't return to its old highs, it still looks like it can be used as a vehicle for just dividend investing, especially if you buy it low. So around here, it looks like the lows. And so if you could even get some share price appreciation from these levels, but we're just trying to collect 15% dividends safely. And so since 2014, we have gone from 15 to 5, which seems bad. I get that. But if you look back at the Morningstar test that we did, it has steadily risen because of all the dividends paid. So yes, the stock falls, but the dividend makes the share price, the share position appreciate underneath. So we're going to go ahead and stick with it. If you guys see any objections, please let me know in the comments. And if you like these videos, click like or subscribe. I used to say that at the beginning, but I figured all you guys knew that. And if you can see this information for yourself, these are real numbers. I'm making real income. You know, the performance is real, 19% versus the S&P. So we're using real numbers, real information, and tricks to get ahead, using this margin, this purchasing power, but staying within margin calls, looking at that available withdrawal number here like I taught you about. So we're using all kinds of tricks, and here's ZTR in the portfolio now. It's going to be one of our smaller holdings, only 5,000, but again, that's going to be a nice boost to our monthly income. So again, leave comments and tell me why this fund should be more than should be 1 star. Please tell me why it's only 1 star. Please tell me what the problem is with this fund, because I see it as a nice addition if you have just a small amount and you buy it at the lows to any portfolio. All right, thanks.